who's the client that's going to be the most appropriate for this type of a strategy? First of all, it's a private business-driven strategy. Captives are very popular in publicly traded companies, but I'm guessing most of the people on the phone are not dealing with publicly traded companies. Certainly at Innovision, we are not dealing with privately traded companies, so it's not really appropriate. It's got a lot of applicability, but we're not going to talk about it today. So our key client is a very successful business owner. To a lesser degree, successful professionals. We'll touch on that, but really we're looking for successful business owners who are operating real businesses, usually with a fair number of employees, facilities, and so forth. They've got identifiable uninsured risk. So what does that mean? We're looking for clients who are essentially self-insuring some amount of their business risk. You all are, if any of you are in the P&C business or you know people who are in the P&C business, you know that the P&C people are constantly being asked, can you get me a lower price? Why do we have all this expensive insurance? How can we cut our costs in this area? So the business owners constantly looking for ways to reduce their coverage, and a captive can be a way to replace some of that in a much, much better, more efficient economic way to do it. Okay, the business owner has to have risk that they're willing to self-insure. And again, I think we've touched on that. Significant gross revenue. The clients that we're working with all have at least $10 million or more in revenue. If they don't, the captive's going to be a tough fit, may even be impossible. So these are real, like I said, real businesses, real business owners. We're not really looking. We had a guy a couple of years ago who had $4 or $5 million a year in consulting profit. He was a single-person shop, had some risk, but in 30 years in business, he'd never had a claim ever once, and so it just wasn't really, just wasn't a good candidate for captive insurance, even though he certainly had lots of taxable income. So good gross revenue is important. The last bullet is probably the most important. Free cash of at least $500,000 or more. Because what's going to happen here is we're actually going to take this money away from the business owner for use in the business. And again, if you've got experience working with business owners, this is going to be difficult. A business owner can almost always find something to do with $1 million or $500,000 or $750,000 that they think is going to improve the value of their business. I can't tell you how many business owners we work with currently and over the years who have annual profits in the millions and are still paying themselves $250,000 a year salary and reinvesting profit in the business. They just do not view that money as theirs. They view it as belonging to the business, and they just, I have one client who says, bigger is always better, and they mean it. So they might have cash, they might have a lot of profit. The question that we have to ask is there free cash? And usually the business owner is going to say, well, there's always cash. The question is what you're offering better than what I can do with the money? So if we don't have any free cash, it's all committed. We have another client who's perfect candidate for a captive insurance company. They have tons of profit. They have all, employees, buildings, tons of risk, but they're committed, and I mean committed, to doubling the size of their business in the next 3 years. And they need every penny they have to do that. In fact, they need every penny they have plus more to do that. So even though they're a perfect candidate on all fronts, they're not a perfect fit here. And so we just had to say, okay, let's come back and look at it in a few years and see how you're doing. Some ideas of some clients that we've worked with who could be appropriate. Developers, general contractors, subcontractors, manufacturers, maybe the best are manufacturers, professional service firms if they're big enough, franchisees if they own lots of franchises. So you might have a Taco Bell, or you might have a Burger King or Subway or something like that, where the people own 40 or 50 or 60 or more of these things. they can be a good candidate. Restaurants and hotel chains can be good candidates. Same sort of thing. It's got to be not just one, but multiple. So not just a single hotel, not just a Days Inn, but somebody who owns 10 or 15 or 20 of these. Physicians groups, again, if they're large enough. If they're too small, they're not going to have the gross income. And they're also probably not going to be able to do it just because most of the physicians are living on, most of the physicians in the business who are the owners are living on the profits, and there's not a lot of free cash. I'm going to skip over hospitals today. There's an opportunity there, but it's not really a prime focus. So we're looking for people who are successful, who have real operating businesses, and who probably will fit into one of these categories that we've just looked at.